Hello, it's me, Kenny Polcari, and I am your host of the party. Today is Tuesday, September 14th, and here it is, your morning market commentary, everything you need to know. So what happened yesterday, right? Stocks rallied. Actually, the NASDAQ weakened, but the Dow and the S&P and the Russell Trends all rallied, right? Leaving investors somewhat confused, right? We're awaiting today's CPI data. Remember, last week's PPI was very strong. Could that be the canary in the coal mine? Oil up and through resistance on its way back to $75 a barrel. The Democrats are pushing hard for this massive tax and spend plan, and markets are hot. So we're going to try the clams al fuoco, which is really clams from the fire, but we'll get to that at the end of the show. The Dow, S&P, Russell, Transports all rallied nicely yesterday, right? As it prepares for some of the upcoming economic data that it thinks may offer some hope for further upside for the markets, all while the NASDAQ struggled under the weight of the most recent Moderna news, suggesting that there may not be a need for a booster shot for most people, and that sent the whole group lower, right? Moderna down 6%, BioNTech down 5%, Novavax down 2%, Pfizer down 2%, and the biotech ETF down 0.5%. You see, there was an article published in The Lancet. Now, The Lancet is a respected international medical journal that was founded in 1823. And it questioned whether or not a booster vaccine is indeed needed. The article reviewed data from clinical trials and efficacy in the real world. Authors included two members of the FDA, Marion Gruber and Philip Krauss, who argued that there's no evidence that the vaccine loses their ability to protect against severe disease, even when there appear to be declines in that over time. Understand that if they find the boosters are not needed, then the longer-term revenue projection streams that those drug companies are banking on suddenly would disappear. And analyst valuations will need to be reconsidered, suggesting that the current valuations may just be a bit rich. And so investors repriced them. At least yesterday they repriced them. Now, I'm not sure. I'm sure we are going to, we can expect all kinds of counter studies disproving this study, and so the fight will continue. In any event, yesterday was not a good day for those companies, and then by default, it ended up dragging the NASDAQ a little bit lower. In addition, the sense was that the recent sell-off, which, by the way, totaled a whole 2%, was overdone. And so the dippers came running back in, especially since the day began with a new Goldman call in oil. And guess what they said? Because get ready, because oil's about to surge higher, because demand is alive and well. Go figure. Go figure. Demand is alive and well. I've been screaming about it for months. Now listen, what's really funny was that in May they called for $100 a barrel of oil by the end of the year. And then in July, when the Delta variant was causing all kinds of angst, they warned of declining demand due to the variant and a shutdown in China and other parts of the region, suggesting that oil would weaken. All while I was suggesting it was all baloney. Demand wasn't going anywhere, and while the Delta virus was here and causing some angst, investors were brushing it aside as they took stocks to record highs anyway. So there was not that real concern yet. Goldman is Goldman, and people listened. So as they talked it lower, they were quietly accumulating positions. And then yesterday, they came out and said, okay, all that stuff that we warned you about isn't really an issue. And oil is about to surge, right? You see how this works? So strap in and get ready for higher oil prices. And oil rallied by 1.3% yesterday, taking it up and through $70 a barrel. And in any event, oil has now broken up and through all three trendline resistance points. And now has a $75 target on it before rising even further as the Northern Hemisphere moves into fall and winter. This morning, oil's up another 50 cents or 0.7% to $70.94, just pennies away from $71 a barrel. The XLE, which is the energy ETF, rallied by nearly 3% yesterday to end the day at 49.16, on its way to test the next trendline resistance at 51.15. And if it appears as that, then it set the challenge of mid-June highs of 56.50. And to add fuel to the fire was that Wall Street Journal article outlining how green energy was going to have a tough time powering the world, and that if anyone thinks we're getting off fossil fuels anytime soon, you better think again. In the end, demand is alive and well, so just stop the hysteria. And the Wall Street Journal article was titled, Energy Prices in Europe Hit Records after wind stops blowing. So it's a great article. You should look it up and read it. On a side note, didn't Joey just ask or beg the Saudis to produce more oil to meet the growing demand and rising prices after he clamped down on U.S. production? I mean, on August 11th, papers around the world ran with the headline that Joe Biden wants OPEC to drill. The White House pleads for more foreign oil. So I'm not necessarily sure that we're getting off fossil fuels anytime soon. By the end of the day, the Dow added 261 points. The S&P was up 10 points. The NASDAQ lost 10 points, which isn't really anything to cry about. That was less than, 0.1%. The Russell added 13 points, and the transports gained 80 points. So it was kind of a mixed day, right? Gains were led by energy, like I said. The energy sector up 2.8%. Financials up 1.2%. Everything else was marginal, really, right? Real estate, industrials, consumer discretionary, consumer staples, communications, all up about 0.25%. Healthcare was weak again since coming under pressure in early September, and that ended the day down 0.6%. The value trade outperforming growth, with value up 0.6, and growth was down 0.1% yesterday, as that trade continues to kind of churn, right? There wasn't any economic data yesterday, but there is some today. At 8:30 this morning, we're going to get hit with the monthly CPI report, and expectations are for 0.4% month over month, or plus 5.3% year over year. Ex-food and energy of plus 3 and plus 4.2. Now recall, this report has been running hot for the past few months, and with Friday's very strong PPI, which is the Producer Price Index report, that showed prices leapt by 8.3%. The expectation is rising that prices at the producer level are going to continue to appear higher in the consumer level. Gavish? So the transitory inflation number that Jay keeps telling us not to worry about is becoming something to worry about. So keep your eyes on the tape at 8:30, and then on the speculation about what Jay Powell and the Fed may say next week. Later on in the week, we're going to get more economic data, the Empire Manufacturing, industrial production, capacity utilization, retail sales, and the Philly Fed survey. All data points that will become even more important to the Fed think. U.S. futures this morning are searching for direction, right? The Dow futures are up 16 points, the S&Ps are up 4, NASDAQ's down 4, and the Russell's up 2 as it just churns and we await. Today will be day 2 for Secretary of State Anthony Blinken to defend the administration's explanation about what happened in Afghanistan last month. Right? Yeah, he was up on yesterday. He was up in front of the House. Today he's going to be up in front of the Senate. In addition, we keep seeing that the Democrats are trying to rally the troops to pass this $3.5 trillion infrastructure package, and with an array of new taxes and an increase of some of the old taxes, they're working very hard, demanding that Democrats fall in line. But there are some Democratic House members that are demanding relief from the SALT deductions imposed under the Trump tax reform package, while the progressive arm of the party demands that there will be no negotiation on the SALT issue. In addition, there's still plenty of resistance to this plan in the Senate, but let's see what Nancy and Chucky promised to members of the party that are signaling a no vote. So think Joe Manchin, Kristen Sinema, as well as some of the House members. In any event, the focus today is going to be squarely on this morning's CPI report, which is expected to be above that consensus, and that's going to lead to more speculation about the next Fed, about what the next Fed move will be. So remember, 8:30 is the key. Markets in Europe this morning are muted. The ECB, the European Central Bank, saying that the bank is ready to move if inflation across the Eurozone does not ease anytime soon. And in addition, they're also waiting for today's CPI report to consider what that means for the Fed, and then by default the ECB, right? Because remember, the ECB is not doing anything until the Fed does something. At 6 a.m., the region was really mixed, really around the unchanged line, right? Marginally up, marginally down, nothing really significant. 10-year Treasury ended the day yesterday yielding 1.339%. The dollar fell a little bit. Oil was up 1.5%. The gold was up 0.2%. The VIX lost 7% as the broader market rallied, once again ignoring any sense of concern. But we know that can change on a dime. Bitcoin has found some stability right at $46,000 this morning, while Ethereum is happy. It's happy at 3,300. The S&P ended the day at 44.68 after testing as low as 44.45 and as high as 44.92. Watch what happens at 8:30. The stronger report should cause investors to rethink the narrative while sending the algos into sell mode. Trend line support is at 44.27, down about 1% from here. And that will most likely cause the buy the dippers to re-enter the market. But you know me, I'm still hoping for a shake the branches kind of correction, right, with a 7 to 10% move. And remember that some of the big banks, Morgan Stanley, is calling for as much as a 15% pullback this fall, right? Now we're in September, October. This is the time. Remember, you can text the word invest to 21,000 on your cell phone to get my digital business card delivered right to your phone. Feel free to download it. Send me off an email or a text. I'm always happy to engage and talk about the markets, planning, thoughts, concerns, ideas, anything that's on your mind. And you can also follow me on Twitter. At Kenny Polcari is my handle, or on Instagram at KennyP1961. And if you're watching this, then you know you can get me on my YouTube channel, which is just Kenny Polcari Media. So feel free to send that out and around too. So what are we having for dinner tonight? This is a spectacular dish. Not difficult to make, but really good. I'm calling it Camille's Clams al Fuoco, which is really clams from the fire. And Camille's that very dear friend of mine who loves to cook just like me. So we got together over the weekend. We invited a group of friends together and we cooked. We made a bunch of things. Recipes are all going to follow this week. I don't want to give them all away. But today's recipe is all about the clams. Now, I did post a picture of this yesterday, but I am going to post it again when this note goes out. So you put the two together, right? Clams al fuoco. And for this, you need 5 pounds of cherry stone clams. You can either pick them yourself or you go out and buy them. You need 5 large white onions sliced really thin, 1 jalapeno pepper, a half a jar of crushed red pepper flakes, 3 cans of whole peeled Italian tomatoes. San Marzano work the best. A half a stick of butter, 1 cup of white wine. You know me, Pinot Grigio Santa Margherita. A half a cup of water and 2 pounds of hot Italian sausage, which you are going to grill first and then slice it at an angle and add to the clams in the last 5 minutes. You want to preheat your oven to 500 degrees on bake, not broil, on bake. Get it really hot. You want to light your grill because you're going to grill the sausages separately once you put the clams in the oven. And now you're going to start by rinsing the clams, making sure you get rid of all the sand that may be on the clam, right? Now set those aside. Do not put them in the fridge. Then in a large, deep roasting pan, you're going to make a bed of the onions, then add in the chopped jalapeno and the red pepper, right? Spreading it all around, mixing it nicely. Now, you're going to add the clams. You're going to set the clams nicely on top of the bed of onions, right? Don't crowd them, just kind of spread them out. You're going to open the tomatoes and hand crush them over the clams. Add any of the juice that's left in the can, just add it right into the pan. You're going to add the wine, you're going to add the water, right? There's no need to add any salt. And why? Because clams come from salt water, and when they open, they release the salty water into the dish. Oh my God, so delicious. Now, cover the pan really tightly with tin foil and place it in the oven for 35 minutes. Now, check and make sure, after 35 minutes, you're going to check and make sure that all the clams have opened. If they have, now remove the tin foil and add in the grilled Italian sausage that you have cooked and also cut on an angle, little bite-sized pieces. Let it cook for another 5 minutes uncovered in the oven, not really any longer. You just want the sauce to blend with the sausage just long enough. Now, remove it from the oven. Using 2 big metal spoons, turn the clams over in the pan. You can serve it right in this pan, right? Making sure to grab the onions and the sauce, helping it all mix. Serve immediate with a warm baguette. Also, which you've sliced at an angle. You're going to use that to soak up the sauce. You're going to finish the wine that you used with this meal. This should serve about 8 people if you get 7 or 8 clams apiece, right? And here's another trick. You can also serve this over spaghetti. Oh my God, it is so delicious. Just boil the spaghetti and take the clams and the sauce and then make individual bowls of spaghetti with the clams and the sauce on it. But make sure you got plenty of cheese at your table to have it, right? So it would be another form of kind of linguine and clam sauce. In this case, it's going to be the spaghetti and clams al fuoco. Oh my God, so delicious. In any event, the day's about to get started. The sun's just coming up. The CPI report is only minutes away. Take good care, and I'll see you tomorrow.